Very good evening to everyone, and very good evening to all right now currently watching and screening online. My name is Joseph from the University of Manchester, and today is a special day. So wherever you are at this time, you could be here, you could be at home. As long as you're keeping safe, that's all matters the most. Today is a masterclass day with, of course, Professor Malcolm Smith. Let me just give a little intro before we begin. Malcolm Smith spent 35 years in corporate life, many in large-scale private companies owned by entrepreneurs. He was the CEO of an international business with turnover of $1 billion for 10 years and has worked in both the East and the West. Malcolm entered private equity as turnaround CEO and has enjoyed over 10 years in the venture capital sector as an investor and non-exec director. Alongside his business activities, he is involved in MBA programs and educational executive programs with Alliance Manchester Business School, London Business School, and Harvard. Ladies and gentlemen, I give you Professor Malcolm Smith. Malcolm?
Hi, thanks very much, Joseph, and I appreciate your kind words as always. I'm just looking forward to seeing you again when we start up the workshop programs in March, which I'm really looking forward to enormously. Okay, so we're going to talk, this is interesting, I've been looking at the chat, some of you have thought of the answer to the question. This has just been written, this piece has just been written, I'm speaking to you from Arkansas, or Northwest Arkansas to be precise, at the confluence of Oklahoma, Texas, and Missouri. So it's a very interesting part of the world to be in. I'm visiting my son and daughter-in-law and our young grandson, Henry, who's 3 months old. So basically, very exciting times. So being as I am in this hotbed of technical revolution, I've rewritten the piece of work that I've delivered a piece like this 10 days ago in the UK, but I've rewritten this specifically for you because I don't want to say the same thing over and over again. And I've also taken into consideration current market movements. So I'm going to say to you, how on earth do you assess value when a company with no revenue is valued on November the 10th on its debut at $106 billion, and then goes up 30% on day one, and then proceeds to dive down after that. And of course, some of you have guessed it's Rivian Automotive, of course. Now, Rivian has virtually no revenue. It isn't making trucks. It's got its manufacturing facility in Illinois, in the US. It's reputed to have an order from a very large company, a logistics company, for a massive number of its electric trucks, but we will see. One question, who do you think might be the biggest investor in Rivian? Anybody, any ideas who the biggest single investor in Rivian is? It might surprise you. Yes, what Ewan's got it, Amazon. Amazon owns 20%. Now, Amazon is in fact a logistics business, and more apart from anything else, it's basically a logistics business. So they're looking, they see this as a kind of a tangential investment in something they're really excited about. So how on earth has Rivian been valued at this sort of money? In fact, it is Amazon, by the way, everyone. So well done, Ewan. So why is it that it's been valued this ridiculous amount of money? And by the way, they've taken 12 billion from the launch to develop, in the words of the CEO, new ideas and concepts. That's a bit vague for me for $12 billion. Of course, it's a story built on growth and the projection of huge growth. So why on earth would Rivian attach such a value? Well, of course, market sentiment in the electric vehicles market is driving this dramatically. And of course, Tesla, the big wahoni in the EV world, in the whole world in terms of electric vehicle producers, which is valued at over $1 trillion. And Tesla is worth more than all the other auto companies in the US put together, despite the fact it only sold 500,000 vehicles last year. To put this in context, GM, General Motors, sold 6.8 million cars last year, of which 200,000 were electric vehicles. In other words, only half of what was sold by Tesla, and yet GM is valued at $91 billion, as opposed to 1.1 trillion for Tesla. Even 5 years ago, $1 trillion business was unheard of. Apple was the first, I think, $1 trillion business, and then it was the first $2 trillion business. So things have moved on dramatically in the last 5 years. Why? it's a growth story. Let's look at Tesla sales in 2021. So in 2020, it was about 500,000 vehicles, mostly the X3. If we look at the third quarter results in 2021, total production was 237,000 trucks. Look at what doesn't matter, the number of vehicles is relevant. Look at the growth, 64% year-on-year growth. Model 3Y production up 79% year over year. Now, Model SX hasn't done too well, it's down 47%, but it's only 8,000 vehicles. Total deliveries were up 73% year on year, and of which the 3Y, which is the real mover, is up 87% year over year. These are unheard of growths. If you imagine General Motors, they ain't going to go up 87% year on year, not a chance, because they're already at a huge scale. They're not going to achieve this level of growth. So the entire business of Tesla is with electric vehicles, whereas GM is actually a fossil fuel vehicle company masquerading as an electric vehicle company. So the reality is that the growth story in Tesla is still enormous, and it's built into the price. So if you're looking, and I'm going to talk about the metrics of how that works, but if you're going to talk about why Tesla is valued at what it is and why Rivian's is valued at what it is, it's because of the growth story, the explosive growth, which isn't available to legacy businesses because they've got lots of bits that ain't growing. So even if GM tripled its sales of electric vehicles, it's nothing in compare to the total sales. And in fact, the total sales of its fossil fuel vehicles will fall over time, bound to. This is the other side of the coin. Of course, this is disruptive technologies. So how do companies get valued in an open market? Markets are meant to be an efficient way to determine the future cash flows from any enterprise. Now, so therefore, the key is growth, because you're looking for growth, and you're not interested in a company that's going to just jog along. You want something that's going to grow like mad so that its value increases. But of course, don't forget, most growth businesses don't give dividends. So the real cash return is in fact the value of the stock. So most go companies don't do any dividends at all because they're investing money like hell in the basic proposition. So of course, we're seeing huge valuations of fledgling companies in perceived growth markets. And disruptive technologies have reached a point where everybody's heard of them. All the mass market knows about disruptive technologies and believe in it. And we're seeing huge changes in the way in which retail investors, who are some of the time driving value, don't forget, retail investors, through their various means, either via things like Polar Capital or Scottish Mortgage, or all these sort of what I'll call aggregate tech funds, are putting trillions of dollars into the marketplace. And that's driving value. Remember GameStop? Some of you might remember GameStop. Reddit is a social media site which is hugely influential. A lot of people got their $10,000 from the president in the US. This was driven in the US, of course. So people had all this money that was given to them during the COVID epidemic, and basically they invested this money, interestingly enough, through the Robinhood site, which is now got its own IPO. And Robinhood was a great way for these people who were then congregating on Reddit to do a very cheap, fast mechanism of buying into a marketplace. Robinhood doesn't charge a commission, by the way, to people who use the site, which is an interesting and very disruptive way of buying shares. So it's its own disruptive story. Cryptocurrency investing is now mainstream, and all the time new constructs have been. For example, I'm looking at construct at the moment, which gives you 10% interest, and also you get the upside in the value as well. And that's a new cryptocurrency concept. But how on earth is this? So this figment of a developer's imagination, of course, Bitcoin was the figment of a developer's imagination. How is that worth $55,000 each? I was offered, and this is how stupid I am, I was offered Bitcoin in 2009 at 15 cents a piece and didn't invest because I thought it was actually a scam. At the time, I thought it was just a way of investing black money. You were saying, I wonder, I get really upset about how much I could have made. Well, yeah, we could all we can all invest backwards, can't we? We're all good at investing backwards. But the reality is you've got to get good at investing forwards. And today's discussion is about that. But don't fret about the things you didn't do. What matters is the things you're going to do and the things you are doing, because that's what matters. So Are digital stocks divorced from reality? No, but they are driven by different metrics. So I've got looked at the NASDAQ. Let's have a look at the NASDAQ versus global GDP. So NASDAQ's a useful metaphor for growth in the value of tech stocks. And I thought we'd look at this and then compare it with the way that the GDP in the world's going to see if there's some connection between NASDAQ and the world. Well, there we are. That's NASDAQ annual growth since, well, it really started in the 90s up till now. And you'll notice around about the year 2000, of course, the huge $5 trillion stock drop. That's what it was. That's how much it lost, $5 trillion. And that was because of the dot-com boom. And the reason why the dot-com boom happened is really quite interesting. It's because no one knew how to value these stocks, because the internet was only really available from 1994 onwards for commercial use. So in truth, everybody was kind of learning what this new market was all about. It was very disruptive. No one knew how to value dot-com companies. So at one point, they were all valued on the number of clicks on their website. Ridiculous, but that's how it was valued. So consequently, they're all massively overvalued. And then it's all of a sudden, somebody woke up one morning and thought, this is crazy, and started selling the stocks. And then we had 3 years of downturn, and then it came back up again. But it's a different kind of marketplace now, much more understood. You'll notice there was a big drop in 2008-9. Well, of course, guess what? This is what happened in 2008-9. The world got caught in the big scam, which was actually was a scam, which was to do with the valuation of toxic stocks. Somebody had this genius idea of wrapping toxic stocks up with good stocks, and thought that the toxic stocks would get wiped out by the good ones. In fact, the good ones wiped out by the toxic stocks. You know, when somebody with a pair of blue dungarees earning $15,000 a year could buy a $250,000 house, 100% mortgage, and they didn't have enough money to live. When that started to happen, people started to think this is crazy. And that's where the Big Short film comes from, of course, because somebody figured out this is stupid. And it was stupid. So consequently, the whole world went into a dive, and that's when the NASDAQ went down as well. But the reality is that was because no one knew what was going to happen. At the time, we all thought we were financial Armageddon, in which case nothing was worth anything. So there is a connection between NASDAQ and the GDP and the global GDP. It was changed. Of course, in 2000, the dot-com boom was a very special problem, but that was because of lack of knowledge. Things have changed dramatically since then in terms of our appreciation of value. So in lockdown, something fundamental has happened. Traditional means of distribution have been replaced by digital logistics systems. The question is, will it continue? I can tell you categorically the answer is yes, because it's interesting, the US was behind the UK, funnily enough, in terms of digital penetration on for example, online shopping. It isn't anymore. It's caught up about 5 years growth in 6 months. So let's talk a little bit about SaaS. Some of you will have heard of SaaS, and I'm going to talk a bit about SPACs, and I'm going to talk about merchant banks, and I'm going to talk about IPO prices. But let's talk a little bit about SaaS. Software as a service is like the oil in the engine of the Industrial Revolution, because nowadays, I was sitting in my son's house, that's where I am now. Yesterday, both of us were working at 5:30 in the morning. He works for Walmart, and he was looking at the current sales figures, which I'm not going to discuss, obviously, for Black Friday and all the rest of it. And I was sitting here, I was doing some work for the university. And I was thinking, wow, when I first started working in the 70s, the idea of two people sitting in a little room in Arkansas doing business via a Wi-Fi and a laptop, I'd have said you were crazy. You know, which planet are you from? So things have changed an awful lot. And software as a service is really a fantastic means of oiling the digital revolution cheaply. What it's saying is you don't need to buy the whole. It's not like the old days where if you're going to buy SAP, you had to have about $3 million in a brain with no brains in it, because it was never a good product. But I'll move on from there. But basically, everything's moved now so that everybody's offering services which you can buy when you want them and for how much you want to pay. So the biggest SaaS business in the world is, of course, Salesforce, which began in 1999, and it's a $100 billion business. And it will be the first $1 trillion business in this space. I'm fairly confident in that. So how do you value SaaS businesses generally? Because Salesforce is now a real business making real money with real revenues. But when it started out, it was a figment of the guy's imagination, really. It's a CRM system, and everybody said, what's CRM? It is, in fact, a great network effect company. And I'll talk a little bit about network effect later. So let's talk about the characteristics of immature businesses, because these are the ones we've got to try and find a value for. You know, we can all find a value for a business with steady cash flow and EBITDA. It's got loads of assets. It's got clients. It's got, you know, balance sheet, blah, blah, blah. We know how to value those kind of businesses because there are metrics out there to do it. It's not new. But what if we've got an immature business, which is actually a puzzle rather than a mystery? You know, I mean, if I a mystery rather than a puzzle, sorry, because if a company is a mystery, we don't have an algorithm to value it. If it's a puzzle, it's a bit like a crossword. There is an answer. We just got to figure out the algorithm. But most young companies are a mystery because we don't know what they're going to do. Rivian's a mystery, really. We don't know that Rivian's going to work at all. In fact, it might not. But something like Rivian is going to be fantastically important in the future because for Rivian, trucks read Tesla cars. That's what it's all about. So when you've got immature business, which you don't really know how to value, you don't have EBITDA because it's likely burning cash, and the same thing for DCF, it doesn't have cash flow. So how can you value a business that doesn't have EBITDA or DCF? Well, you can. So given that we can't take those two, we've got to find a proxy for cash. And this is the interesting bit about young businesses. There's always a proxy for cash in there somewhere. I mean, as these young businesses grow, of course, it will turn into real cash, not a proxy. But we've got to find something we can value today to try and figure out what the cash flow is going to look like in the future. Because you value businesses on future cash flows. End of story. End of. So what's happened with SaaS businesses, of course, is they borrow money, pour it into getting new clients, and then hopefully those new clients generate cash for them. And of course, the characteristic of a SaaS business is that its gross margin is typically over 90%. So each new client doesn't cost anything to service, basically. 90% of it is straight cash to the bottom line. So in a real sense, where revenue is so closely tied to cash generation, revenue is a great metric for value. So these SaaS businesses are valued on a multiple of revenue, not anything else. EBITDA is a bit meaningless when you're pouring all your money into getting new clients. And that's called a marketing expense. Actually, it's a capital expenditure because for SaaS businesses, to gain traction is all about getting new clients. So the real issue for a SaaS business is how much does it cost to get a new client? I'm going to show you some data on that in a moment. The multiple of revenue, which by the way varies from 3 to 50, which is a real big range, is a function of the quality of the earnings and the past and projected growth rate, and whether they regard as a network effect business. Network effect is that as more and more people use the good or service, that good or service gets more valuable. Classic example is WhatsApp or WeChat. Uber, same sort of thing. More people use it, the more value it's got. So how are we going to value SaaS business? What should you look at? If you're looking to invest in a company or you're trying to value it or buy it, you've got to look at these things. The duration of the contract is important. The more sticky a client is, the more money you're going to make over time. The churn percentage, in other words, how many people you lose every month. Typically, a good SaaS is 2.5%, by the way, 2.5 or 3% per month are lost. And this is a proxy for lifetime value, of course, because the less the churn, the more you make, because they don't leave, they keep on buying. So the lifetime value increases. The cost of client acquisition and time to recoup it, this has just come out in the last 2 years, that it's not enough to say, oh, my client acquisition cost is quite low. Well, yeah, but if you're selling something at a very low price, then maybe that client acquisition cost might be 5 years earnings. So what is our client acquisition cost compared to the revenue? And it's got to be less than a year. 9 months is a good kind of yardstick. The company growth rate is critical, and more importantly, the sector growth rate, because you know, as the man said, in a rising tide, all boats, you know, it takes all boats up. Sadly, when you've got a falling tide, all boats fall as well. But if the market's rising, you've got a rising tide. Everybody on that market does quite well. Some do fantastically well, but everybody does better. And of course, the management record is critical. If you know, one of the reasons why Tesla is so valuable is one word: Musk. End of story. Elon Musk is an icon of the today. Is a bit like Steve Jobs used to be with Apple. Let's not kid ourselves. That's one of the reasons that, and he keeps on sending these tweets, which are, everybody else would think were designed to drop the value of the business. In fact, the business keeps going up in value. He recently tweeted saying, "Oh, I might have to sell $10 billion worth of stock to pay my taxes. Should I do that?" To his Twitter account. And 70% I think said yes. So he sold them and the stock price went up. Now, normally when somebody dumps $10 billion worth of stock, the market price falls. Not at all. Very, very clever. So management record is critical here. So given that we've got a metric for volume, we need to find a lookalike. And that means you've got to look at deals in the sector that have happened and then try and find out, well, does my company look like that? And of course, each sector varies and the metric changes for each sector and the multiple changes for each sector. I mean, who would have thought that WhatsApp was worth not far short of $20 billion? Who would have thought of that? It doesn't have any revenue. At the time, believe it or not, Facebook bought Instagram for $1 billion. And that was the time when the IPO was going to happen for Facebook. And of course, at the time, Zuckerberg's job was up for grabs because the investors said, "You're crazy, paying $1 billion for that little business there. What are you doing that for?" Best buy ever. That's one of the best buys of the 20th or 21st century. So one of the key issues, and I'm going to cover this in the next few slides, is the investor's appetite for risk. If investors are prepared to accept risk because they really like a sector, because, like, for example, electric vehicles, because they think this is going to grow like hell. I want to be on it. I want to get into it. It's called fear of missing out, FOMO. And beware of cryptocurrencies, ladies and gentlemen, because FOMO is driving the price of cryptocurrencies. Let's not kid ourselves. There might be some truth in it, but you know what? What's really driving it is FOMO. So let's talk about one example that happened recently. In December 2020, Slack was purchased for about 30 times sales, $27 billion. It was bought in cash and stock, very clever. Salesforce's stock is rated very highly. So if they buy with stock, it's a lot better than cash because you're buying with future earnings. And this is a point of the future of digital enterprises. And basically what was said by the CEO of Salesforce at the time, and it was proved to have been a good buy, I think, the combination will create the operating system and a new way to work, uniquely enabling companies to grow and succeed in the all digital world. That's a bit of an anodyne statement, but you know what? Guess what's happened? In 2020, Slack's revenues were not far short of $1 billion. So the buying price was a massive multiple of 31. However, the revenue growth is 43% year on year, which is massive. So this could be seen as a forward projected multiple of 15 to 18 times. Now, with gross margin at greater than 85% for Slack, and the fact that stock was a major factor in the purchase, it will have been accretive to value for Salesforce in year one. And in fact, Salesforce stock went up by 40%, which isn't a bad effort in a business worth $100 billion. So, in fact, the increase in the value of Salesforce is more than it paid for Slack. I'm not sure that was a bad buy now, is it? Think about that. Now, how do you get valuations? Currently, there's more IPOs than ever. And if we look at some recent deals, DoorDash, you might have heard it, is like a delivery company, a bit like Deliveroo. Lost money consistently, floating in December 20 at $33 billion. Yesterday, it was worth $63 billion. Because, I'll tell you why that is. It's because even though COVID has been relaxed somewhat, certainly in the US, the COVID restrictions are relaxed, it's still growing sales. So the model works. So it's doubled in value. And they thought it was crazy when it came out in December 2020. If you're an investor that, I think you'd be quite happy with that. Coinbase, other way around, founded in 2012, trades in cryptocurrencies, floated in April of this year, 21, at the value of 86 billion. Today, 68 billion, gone down in value. People aren't quite so sure about that one. It's not like DoorDash. It's just actually a platform for selling cryptocurrencies. What's exciting about that? Because there's Toro and all sorts of others out there now. There's nothing special about it. That Coinbase, the name has got a lot to do with the value on day one. Very cleverly positioned. It was trying to attract people's attention because of all the furore around Bitcoin, etc. So let's talk finally about IPOs in 2021. This year set a new record for IPOs. With 6 weeks to go, the votes to 2,850 businesses have been floated globally via market positioning, normal market position or SPACs, and have raised $600 billion, which has driven everything else into insignificance. It's just not. I mean, the biggest one of all this year has been Rivian, and before that, the one before that was Alibaba when that was floated. So, why is it that this is such a globally attractive market at the moment? Why are IPOs so hugely popular at the moment? Well, 2 reasons. There's first of all an overhang from the last 18 months. Secondly, there's a wall of money. And the big worry at the moment is inflation starting to rear its head again. I remember when inflation was at 15% in the UK, and most people don't remember that, but I do. And in fact, inflation is a big worry for the investment community. And if you can't get big returns on bonds or banks, you've got to find, unless you're going to prepare to lose value, you've got to jump into stocks, because stocks are the only way of getting better returns. And that's what's driving this. There's no misunderstandings. If bond yields were 15% and banks were 15%, everybody put the money into that because it's safer, better than not. So they've got to go for new offerings. How's the IPO price set? Very interesting question. It's a bit of a dark art. Historically, it's been decided by advisors, merchant banks, who then underwrite the issue for a huge fee. So if it doesn't do well, they buy the stock off the market and offload it over time. They take some of the risk, by the way, for a heck of a fee. The problem is the banks set the price. So they've got a conflict. It's not in their interest to overprice it because they're going to get left with free stock that's going to cost them money. So they tend to undervalue to make sure it gets away. They pretend to the client, oh, it's in your interest, the market, the market likes your stock and it gets away. No. It's in the bank's interests because they don't want to pick up the stock. So consequently, the old method of pricing has become a bit sort of passé, and they've got 2 alternatives. They've got book building, which means you sell parcels into the marketplace, and the banks have got nothing to do with it. And Google did that. And I think Google was the first big deal that went by a book build, and there've been some recent ones as well. Then you've got SPACs, of course, special purpose acquisition companies. However, they're now under serious regulatory problems because they were a bit of a scam as well. And there wasn't much money at risk in the SPACs by the original founders compared to the money that was at risk for the investors. So they've done very well indeed for a short period, but they're slacked off a bit now and back to standard IPOs. So, common sense pointers to value. These are things. Common sense, by the way, is hugely underrated. It's a very important attribute. Look at the need being addressed. In other words, is it currently being addressed by an old model? Is the market fragmented? Is it a big market and is it growing? Remember those growth issues. Does the product have a clear product market fit? In other words, does it do what it says on the tin? And more importantly, do people know how to use it? The reason Uber grew so quickly is everybody realized it was a digital taxi hailing device. It was like whistling at the end of the street, except you do it by a phone and didn't have to bother whistling, didn't have to go at the end of the street. Very obvious. So, very important issue you've got to think about is what are the costs to acquire clients. I'm going to show you something on that shortly. And how is it to monetize the product? Facebook has got a bit of a problem with WhatsApp because they're not quite sure how to monetize it. They've tried their usual naughty tricks of taking the information through from WhatsApp to Facebook and monetizing it there, but that's been kind of stopped. Obviously, I'm not saying they're doing anything illegal, they're not, but what they're doing is a little bit dodgy, I would have thought, and people aren't too happy about it. So, real value lies in finding a more convenient and cheaper route to the customer. Amazon's a classic example of that, and so is Alibaba. Once again, easy to understand models like Uber just fly. Social platforms are great. The only problem is there's only going to be one. There's only going to be one Facebook. Well, there's only going to be one WhatsApp, and there's only one WeChat. There's not going to be another because that's why they're so valuable. Once you've got traction, it's hard for anybody else to compete. The owners of WhatsApp have left there now, and they're trying to form a new product called Signal, which isn't doing as well. So fast forward to 2020s. What will be the growth sector the next 10 years be? Anybody got any ideas on that? We're going to be finishing shortly, but I want to ask you this question. What's going to be the growth sector the next 10 years? And I'll see if your figures of the names are the same as mine. Put them on WhatsApp, or so we've got on WeChat, they've got renewables, renewable energies, tech, that's a bit broad now. AI is a bit broad. Energy trading is interesting. I'm going to come back to that. That's very similar to, you might talk about carbon out there. I think big data, fintech, yes. Sustainability, without doubt. Clean energy, industry of natural food, yeah, maybe. Carbon trading, yes. Electric vehicles, yes. Recycling, green technologies, robotics, it's always been around for a while. Telecoms, not so sure, and we're going to come back to telecom security, cyber security, medical industry, water security. That's a good one. The new oil, of course, water. This is all good stuff. The metaverse has really took a head. Of course, that's Mr. Zuckerberg, isn't it? In fact, he's even called his company Meta. Space exploration, well, sort of. I would have said space exploitation, perhaps more so than exploration, because space exploration is for the big boys, for governments. Real exploration, for example, this whole business about Musk wanting to go to Mars, he's not going to pay for it. These are mine. Cybersecurity, very important. Green technologies of all kinds, carbon trading, renewable sustainability, absolutely, because we've got to stop. The reason that, look, let's be honest, the reason the world is being fried is there's too many of us. We can say what we like about, we've got to stop carbon being emitted, we've got to stop burning coal. It's because there's too many people in the world. We're not going to solve that one overnight because that's going to get worse. So what we've got to do is accommodate the fact that we've got too many people in the world by having green technologies. Healthcare is hugely important because we're all getting older. And of course, being in the US, 20% of the GDP of the US is absorbed in healthcare. And that's a phenomenal sum of money. That's ridiculous. I mean, in the European Union, for example, it's nearer 10%, and that's figured as high. It's double that here. The metaverse, people are going to get lost in the metaverse. Well, we'll see. Virtual shops do exist. You can buy unicorns, I believe, if you want to. I'm in a store in the metaverse, but I don't really want to, thanks. It's up to you. But the metaverse is definitely it's a bit worrying, really, because people can get lost in there. And I don't want my grandchildren lost in there. Blockchain technology is hugely important, Mohammed. Really, really important. And I would almost class that as cybersecurity, because blockchain is a cybersecurity tool. That's why I haven't shown it separately. Blockchain allows you to handle big data in a very secure way. I think that's a very, very bland way of putting it, but that's what it is. So, a cautionary tale. Before you rush out to invest in the aircraft bonanza, let's have a look at what typically happens with a successful float. The price is set, usually quite low. On floating, market frenzy dries up the value. Profits are then taken by professional investors. Original investors cash out some of their holdings, for example, the private equity houses or VCs, and that drives the price down. Then all of a sudden, market conditions take over, because if the market's good, everything's good. Market's bad, everything's bad. And then analysts start to make reports. And I'm going to show you one such report. In conclusion, to quote Shakespeare, all that glisters is not gold. Look at the story. If the growth prospects of the company and the sector in which it operates are truly staggering, then look to buy, but don't look to get in cheap and sell high. If you really like something, buy it and stay with it. Network effects are really valuable, so look for their existence. With a network effect, the product becomes more valuable the more people use it. Facebook, for example, WeChat, WhatsApp, and Salesforce, actually. It's become almost the verb. Now, let me go back. Let me show you something. If I'm going to stop sharing, I want to show you some stuff I was looking at this morning. It shows you how I'm trying to stay current. I'm going to talk about a company called Darktrace. I'm going to share you some stuff from Motley Fool about Darktrace. Darktrace went up, doubled in price. It went up from £2.50, the asking price, up to more than doubled. It went up to £9.80, and I bought it, of course, and I kept it £9.80. More fool me. I didn't keep it all, but I kept some of it. And this is what happened. People started looking at Darktrace, which is cybersecurity, sexy area. America, the UK, it's got the right kind of spread, it's got the right kind of product, and it's sort of sexy in terms of what it says it can do. Then they started looking at this, and they started comparing Darktrace, which is after all cybersecurity, with lookalikes, Avast and Norton. Now, Darktrace says its AI is far superior to anybody else's. This is your AI word. But then they started looking at it logically. And this guy said, well, isn't that interesting? Because the gross margin of Darktrace is more than the others. However, the sales and marketing expenses, a percentage of revenue, oh dear, 67% versus 10% and 10%. That's a lot of money. Now, research and development expenditure, oh dear, they're being outspent. And if you believe that it's an AI story, then you shouldn't be letting anybody else outspend you in R&D. So what's being stated, and Darktrace has kind of dived, and it's down on the market again today. In fact, let me just have a look and see what it's doing today. Darktrace is down again, and in fact, it's down to 493 when it had been up at just short of £10. And the reason for that is people are starting to look up these numbers now. It's no longer just, oh, it's cybersecurity, I must buy it. It's, okay, how does it compare to other cybersecurity companies? And if you believe in this is an R&D story, great. But hang on, I'm not spending my money in R&D. I'm spending 67% of my revenue on sales and marketing. So I've stopped spending R&D and I've started trying to sell more and more and more. Well, that's a kind of a story that doesn't hang together. So I'm going to stop sharing now, and I'm just going to ask you, if you've got any further questions, I'm happy to answer them. And I hope I've given you enough. Look, it's food for thought I'm giving you today. This is what we do in the MBA program. It's not about telling you, oh, this is what has always happened in the last 20 years. It's about, this is what might happen in the next 5 years and next 10 years. And that's what the MBA program is about. And I've tried to sort of introduce you to a whole suite of different ideas, maybe too many, but that's never a bad thing for clever people. And I want you to start thinking a different way. And this is what you're going to be exposed to on our programs. It's making you think about the same things different ways. Because as a very wise man once said, if you keep on doing the same thing over and over and again, expect a different result, then you're crazy. So what you've got to do is think about what you've done in the past and then figure out, is it continually relevant, or do I need to change what I do? So ladies and gentlemen, over to you. Any questions, I'm happy to answer. You want to see the last slide of the presentation? Yes, I'll do that. 1 second. There you go, that's the last slide. Is that okay? Do you see something like 2008 happening again the next decade? Yes. There's no doubt about it. We're going to have another financial crisis. We have one about every 10 years. We don't always hear about it. The first one that really hit the world well, no, there's been lots. I mean, it started off with the South Sea bubble, of course, which was around about the 1700s. I mean, the fact of the matter is, there's always been these sort of bubbles and bursts. They're just going to be more frequent. What are the most common fail points for an IPO attempt? Well, actually, at the moment, there's a lot of companies want to go IPO and they can't, because the reality is the market's not working for them, perhaps, or it depends on the market conditions. So the fact of the matter is, the market conditions impact dramatically on new IPOs. A lot of companies you'll see get pulled because the market's not good for them. Fike says, are you conducting short courses? Depends. Well, in the university where we do 6-month courses, it's part of what we do. My 2 programs I do are NSK, Negotiation Skills, and BCPE, and they're elective programs within the university. Philip, how do you value cryptocurrency whose aim is to create the next Ethereum, e.g. creation of a new blockchain? Well, that's a really tough one, isn't it? The blockchain is the most important thing, I think, Philip, and I think you made a good point there about blockchain. Blockchain is just cybersecurity a bit large, and of course, big data is the name of the game today. And I'm sitting here in the sort of center of the big data world in the US, and it genuinely is. It's US and China are the places where they're really chomping data in a big way. And of course, managing that data in a secure manner is critical because you can lose your shirt if somebody gets in there and corrupts it. And of course, there's lots of people reputedly from governments that are trying to destroy cybersecurity gates and then get into your data and scramble it or sell it to someone else. Well, you've got to stop that happening. Why have we looked at NASDAQ and not NYSE? Because NASDAQ is more related to tech products rather than NYSE, generally speaking. I just chose it as a metaphor for tech. Following the current inflation, do you think the rise in IPOs could result affecting the price? Look, the fact of the matter is, it's very difficult to predict what's going to happen and how the markets are going to change. I will say this, that the S&P it seems to me to be overvalued at 20 times earnings. Projected earnings, that's a high rate compared to what it used to be, but that's more like proper companies. As to whether tech companies are overvalued at the moment, probably some of them are, yes. But you know what? The growth is going to drive that, and over time we'll see. How do you see space-based business? Interesting, the space-based business. To me, the biggest thing going on in the space at the moment is the release of these low-altitude satellites. And that's going to change the internet for the world. It's going to be a great thing, actually, because you're going to have access to internet all over the world very cheaply because the bandwidth is going to be available very low cost. That's what I'm looking at the moment.
Please address questions online. Yeah.
Do we have more questions online? We can ask Malcolm. Everybody online? How about here inside? Anyone from the audience would like to ask Malcolm a question? All right. Are we good, Anx? There you go. There's one more question here, Malcolm.
Yeah, got it.
From Philip.
Yeah, I'm reading it, actually. It's quite an interesting question, so I'm taking my time reading it.
Go ahead.
Well, this is interesting. You're making the point. See, cryptocurrency is almost entering the mainstream now. Well, it is, because you can use it, actually. You can pay for things with Bitcoin now, for example. And there's all sorts of new ones out there that are really wacky names. Doge was the one that amused me, or Doggy, which was dramatically increased in value because of a tweet that was made by Elon Musk. It's all about getting known, isn't it? But most of the new cryptocurrencies are, in fact, going to destroy value rather than create it, because they're all jumping on a bandwagon, right? So now we're going to see lots of things round about cryptocurrencies. Like, for example, in the US now, there's almost like a gambling being set up around the value of cryptocurrencies. That's happening today. And I'm having a look at that personally with my son, because my son does a bit of this in the US. So the fact is, it's almost like it's new metaverse, to use Zuckerberg's horrible phrase. Cryptocurrency has become a kind of a subset of the marketplace in the world, and it's going to have its own universe round about it. And you'll see more cryptocurrencies, but more importantly, cryptocurrencies have entered the mainstream. And we will see the reason why the big banks don't like cryptocurrencies is because it's a democratic movement and they can't control it, and they can't regulate it, and they can't make money out of it. That's why they don't like it. And some of the central banks are trying to create a market, trying to bring cryptocurrencies into their space because they don't like fintech, because the banks themselves are kind of old dinosaurs, and these new fintechs coming in there are zapping away at the market's core business, and banks don't like that. So, of course, unfortunately, banks have a large say in what happens in the world, so they're using their power to try and create regulation around this, which is going to kill it. I think they're going to struggle, because this is a democratic movement now, and there's a whole load of people out there in the world that want this to work, and ordinary people start investing in cryptocurrencies. and that's making people think, oh dear, we've got to have to think about this a different way. So you've raised an interesting point there, Philip, but I'm just watching this space. It's an area which I think is very exciting.
Anyone else online? There's one more here. Malcolm?
Yes.
That's it? You see more questions from? Oh, there you go. There's one more from Milad, Malcolm.
With regard to NFTs, honest answer to that is I don't know enough about it to pass an opinion, and that's the truth. So I'm not going to pretend. I know what I know, and I know what I don't know. But the fact of the matter is, that is an area I'm looking at currently, and I'm not going to give an opinion which is based upon anything other than knowledge. So you probably know more about that than I do at the moment. I've been looking carefully at cryptocurrencies and why they're growing so fast because I'm interested. I will, in fact, now accelerate my learning on NFTs.
All right. Thank you, Malcolm. I think that's it, Malcolm. Again, for those who are tuning in right now with us, thank you for attending this masterclass for everyone here. We would like to remind everybody that for those of you who are interested in doing an MBA, Malcolm Smith is one of our professors. In fact, he's doing negotiation skills, venture capital and equity. He normally comes here during a workshop, right, Malcolm? Or are we going to see you in January or March?
No, you're going to see me in March. I'm going to be there in March. I sincerely hope so, anyway. That's what I'm told at the moment, anyway.
So for those of you who are interested, we are here to help you out, to support you out with your interest. For those who are tuning in right now online, you can reach us to our website, of course, manchester.ac.ae. And at the same time, just a little bit of an announcement. We are building a school, a school with Dubai Cares. So for those of you who wish to participate in this remarkable venture that we're doing, you can always visit our website, manchester.ac.ae/SR. Thank you very much again for coming here, everybody. And thank you again for tuning in. Malcolm, thank you again. We'll see you soon. And be safe there. Yeah?
Right. Oh, I'm no doubt at all. I'm looking forward to seeing you very much at this point in time. And whatever happens, I no doubt we'll meet up and you'll take the mick out of me as you usually do, Joseph. Okay.
Absolutely, Malcolm. Have a great evening, everyone. And we'll
Thank you very much.
Thank you, Malcolm. Bye.
Thank you. Bye.